Welcome, everyone. Thank you so much for joining us for today's Appraisal Buzzcast. I'm Jim Morrison, and with us today, we have Melissa Sanchez Malpass, the Senior Associate of Consumer Finance and Fair Lending Attorney at Alston and Bird. We'll be talking about her white paper, Appraisal Values and Lender Liability, Art, Science, or Gamble. And on this topic, we're going to be touching a lot of the racial bias and what it means for lenders. Melissa, thank you so much for joining us.
Thank you so much for having me.
Well, we really appreciate you joining us, and I read your white paper. It's really insightful. We're going to put a link up for everyone who's watching this to watch it after they're done with us. But thank you so much for joining us.
Great. Thanks so much. I appreciate being here.
Well, let's get started a little bit. Tell us a little bit about how you got into this part of the industry.
Well, I have been what used to be called a mortgage banking attorney, and now it's sort of a lot more than that. Consumer financial services of all sorts. I've been doing that since 2005. I started out with mortgage regulatory issues and a lot of the fair lending issues that kind of really peaked over those years after the recession in 2008. And so fair lending really became something that I was very interested in, and it's a little bit complicated with the mortgage lingo, but I really embraced it, and it's kind of morphed into other areas: fair servicing, fair valuations, and right now the hot topic of appraisal bias and racial equity.
How can a lender ensure that its loans are supported by adequate collateral while being mindful of potential appraisal bias?
So it's funny because the whole appraisal industry is created mostly to avoid overvaluation of homes, to ensure that lenders and investors and the government agencies, there's enough collateral to support the loan. Now it looks like, over the last few years, people has become more of a thing to talk about, and people are realizing that there is some bias, perhaps built into the process. There's some systemic issues we could all agree that need some revisiting. The question is, how do you go about doing that? But as a lender, you're a little bit stuck because you still need to comply with, all applicable guidelines for making sure that the loan is supported by the value of the property while balancing concerns about racial bias and equity and those sort of objectives.
Yeah, you in your white paper, you said that in 2008, after the crash, that minority homes were more likely to be affected by this. How do we figure out how to do that and not overvalue these homes and put them in a worse position as the market starts to turn back down a little?
Well, one good thing that we didn't have before was the appraiser independence requirements. And as long as we really respect that framework and we don't have the issue of lenders trying to influence appraisal values, then I think we should be all right. But we will need to, there's certain things that'll need to be done to make sure that at least on their face, appraisal reports are not discriminatory. Language that may have been kind of okay to use before that really shouldn't be in appraisal reports anymore. That the reports are supported by factual information rather than opinions or more subjective phrases, so that you don't open the door for bias.
And we're going to have a conversation with Scott Reuter later. For our followers, you'll have to keep your eyes out for it. But he was talking about the other day about some of these words and desirable location. Any of this subjective stuff is really something that could come back to haunt appraisers and lenders.
For sure. Desirable, undesirable, that's kind of been used plenty and probably is still in, appraisals today, but really trying to stay away from words like that, phrases like pride of ownership or crime-ridden area, high crime, those things. Even really talking about proximity to particular cultural landmarks, things like that. It's, a really interesting one for me has been, I did a little bit of research into this, and custom built is a phrase that is supposed to make your house more valuable. I'll tell you, we bought an old custom built home, and it is a nightmare because nothing is standard size. And when it's time to fix something, you really wish it was not custom built. However, people use custom built appraisers, put that in their reports as if there's some, maybe there's some value that can be assigned to that. But rather than saying custom built, you should talk about the quality of the fixtures, the quality of the construction materials, things like that, because custom built, within this whole issue, there's the issue of discrimination and undervaluation, but there's also the worry of overvaluation of properties in white neighborhoods. And that's something that the GSEs have kind of pointed out in their report. So just being mindful of all that kind of language, even the word gentrification, that's one that HUD even required its FHA rostered appraisers to use, to discuss the effect of gentrification in the report. That was as recently as 2016.
Wow.
And so that kind of quietly got cut out of there in subsequent guidelines. So
well,
it's
I'm
just,
sure there's still
trying to
some
stick with
appraisers that
facts.
are using that in their reports if it was that
Right.
recent.
Right.
And I do agree with you. Our house before this one was a custom built one. And it went so far as like when a light bulb went out, they had different fixtures on different floors and you never know what light bulb you needed. It was very frustrating.
Try replacing a window. That's not standard. It's, double the price right there.
Right. All right, well, let's take a quick commercial break and we'll be right back. Our first sponsor today is LIA. Since 1978, LIA Administrators and Insurance Services has been offering E&O insurance to valuation professionals. LIA applies superior customer service, exceptional liability education from Peter Christensen, and unparalleled claim defense managed by Claudia Gaglione. LIA offers error and omissions, commercial bonds, general liability, cyber liability, and real estate agents and brokers E&O. Visit liability.com or call 800-334-0652. All right, welcome back, everyone. Melissa, what steps can a lender take to eliminate some of this fair housing risk while staying within the current appraisal framework?
Well, a couple things that lenders can do, and they can work with their AMCs to do that if they haven't. AMC is sort of take a look at the type of review that's being performed on appraisal reports, maybe add some text-based searching, make sure that appraisers, have not had previous discrimination complaints. In terms of, what the lender can do for the borrower, you could consider a second level underwriting review for denials that are based on, insufficient collateral. Really, it depends on the lender AMC arrangement and what the AMC has been retained to do and where in that framework, like what party should be doing what, whose roles should increase. But of course, at the end of the day, under the Fair Housing Act, as the lender, even if you retained an AMC and they did what they were supposed to do, there's still risk that you could be liable for any third party in the chain, the appraiser or the AMC.
And you made a great point in your white paper so you said even with the lender performing these actions consistently in accordance with its policies without regard to race, the level of scrutiny into the lender's involvement with the mortgage settlement is unprecedented. So you said like looking into specific neighborhoods more, and tell me if I'm wrong, that can be a problem too. Over analyzing certain ones.
For sure, because the fair lending laws prohibit you from taking into account, race, ethnicity, or other protected characteristics. So by looking into it too deeply and trying to figure out, hey, maybe we should give a second appraisal for every borrower in a minority area. You first of all, appraisal GSE guidelines wouldn't let you do that, but also then you'd be treating borrowers differently based on race,
Right.
Intentionally. So that's another issue. But on the precedent scrutiny here, it's interesting because if you had there's never been a push for lenders to scrutinize, title work. They retain a title company, they rely on that title search and that everything is good to go. And here, if you retain an AMC, you do your vendor oversight and your due diligence. The AMC does a good job, as they've been retained to do. The lender is still, regulators are still kind of pushing here. What more could a lender do? And, short of redoing the appraisal and having an appraiser on your staff that's geographically competent in every area, I mean, that would be really the only way to do it. And that sort of expectation is just really out there.
And then the cost would explode by doing that as well.
For sure, the cost for the appraisal, the cost of the loan, the time to close, just to to open that appraisal back up or redo it or order a new one if you find one tiny mistake. The GSE guidelines say if you found a material deficiency, you can go ahead and order a second appraisal. That's the standard, not a suspicion or not, maybe this one adjustment was a little bit, it doesn't have to be a perfect appraisal. And so that's, nobody knows where to draw the line there. Like how much should a lender be doing without opening itself up to, more risks, like you mentioned.
Well, that's great. And those are some very interesting questions we're going to see going forward. Let's take one more commercial break and we'll be right back. Today's learner has a myriad of educational options to choose from, both online and off. But for appraisers and professionals who rely upon appraisals, your high-quality, comprehensive valuation education resource should be the Appraisal Institute. The courses we offer are rigorously researched and largely developed by practicing appraisers using their real-world residential and commercial valuation experience. Go to appraisalinstitute.org/education for more information. Welcome back, everyone. So, Melissa, let's finish this off with what can lenders do to protect themselves with this going forward? And how do you see this affecting the industry in general going forward?
Well, as the industry and as the framework sits now, as the appraisal system sits now, there's the lender's hands, as I said, are a little bit tied, but there are certain things that they could think about. Like I mentioned, either retaining an AMC to do some text-based searching of their appraisal reports or doing it in-house, considering a second look underwriting review for denied loans based on insufficient collateral, doing your due diligence with your AMC and the appraisers on the panel, making sure that they haven't received discrimination complaints. You could do additional analysis and see whether, this is an appraiser that typically comes in a little low. The problem is, from an AMC and appraiser perspective, a lot of the risk is in refinance loans, and you don't know that there's no contract price, right? So I think there are studies that, half of cash out refis come back with a lower appraisal amount. And it's not discrimination necessarily, right? There are multiple legitimate reasons. So once you start to kind of do any more than those things I mentioned, that's when it gets a little bit risky, because now you are specifically considering race and ethnicity and those characteristics. As for where the industry is going, there was an appraisal bias subcommittee meeting last week, and Director Chopra spoke, and they used the word Byzantine. They don't have a very good view of, regulators don't have a very good view of the appraisal industry that, in part they created themselves. I don't know, but they recognize, I think, the regulators, that lenders can only do so much and appraisers and AMCs can only do so much. You can make sure that there's appropriate training. That's another thing. But at the end of the day, the system is designed in a way that keeps the lender very separate from the actual valuation process. So until, there may be some changes coming down the pike, there have been rumors that, maybe a homeowner should be added as an intended user on the report. That could have, significant consequences. You're basically creating this private right of action now for a homeowner to sue if they don't like their appraisal value. So I don't know. There are a lot of people who have to opine here, a lot of players, the GSEs, all the members of the industry. So we're kind of in gridlock, I think, for now, but maybe some small solutions will start to emerge. But I think we can all agree that at least things like discriminatory language or language that you can avoid in a report, that's an easy one. That's, it's not a low-hanging fruit, and that should be something that people strive to do.
Do you think they'll be going towards less narrative in the reports and more just numbers, or how does that?
A lot of things. So I think it could go either way. I think half of the players in the industry want this to be a super automated process. AVMs are great. That's how it should be. Fewer words, the better. And then I think others want the commentary because they want to see, how you support the particular adjustment that was made, and what do you really mean by that word. And so I really can't say. It could go either way. I mean, there are pros and cons, right? Some people say the AVMs are inherently biased.
Mhm.
And, there may be some truth to how comparables are recommended or ranked, that maybe that could be revisited, the AVM, but also the report, others say, well, no, AVMs are great and we should just have nothing, no commentary. I don't know. What do you think?
I think we're going to see a lot in this upcoming year in 2023. There's a lot of changes coming, and I don't know what's going to happen, but it's something that we need to keep talking about to move this forward.
Agreed. Yeah. We don't really, all we can do is work with the system we have right now and just try to minimize risk as much as possible.
Yeah. Well, thank you so much, Melissa. We really appreciate your time today. It was a great discussion. And like I said, there's a lot coming up that we're going to have to keep our ears peeled for. So thank you so much for your time.
Thank you. Thanks so much for having me.
All right.
Bye-bye.
And thanks for our subscribers and our sponsors for helping us put these on. If you have any comments or would like to be included in a future Buzzcast, reach out to us at comments@appraisalbuzz.com. Thanks and have a great day.